Good evening, ladies and gentlemen. It is a trio instead of a quattro tonight. And just to clear the air, this will only be addressed one time and one time only. This was nothing more than a scheduling issue. That is all this came down to. We are still very good friends with Tanner, and he is welcome to come on and join us at any time. There were scheduling conflicts, and this was the time that just worked for the majority of the group. And that is the only time that will be addressed from here on out. So before we get started, please remember, we are not financial advisors. We have no idea what your situation is. Please pause and read the disclaimer. Everything we say is our own opinions. We do a lot of due diligence, and that's it. Remember, do your own due diligence, please. All right, guys, what's going on?
Hey, new show. We need a new name.
New show. A lot of people are saying they like the name Stock Market Unfiltered.
Nah.
A lot of people saying they like it.
Nah.
Tevis ain't feeling it, huh?
We got a suggestion from the crowd, Steve, and
Okay.
we want to run it by you
Okay.
as a name for the show. We got several suggestions actually, but the one that Roy and I both like, and you might not like it at first, but I'm sure you'll warm up to it.
Oh, you're sure I'll warm up to it? All right.
Well, if you don't, you don't. I don't know what to tell you. You ready for this? He leaves. Oh,
No, I'm right here. I'm getting my damn phone charger.
okay. The Stock Market Leering Center.
No,
Fuck.
there's no warming up to that. No.
Leering
so what-
Center? Come on, man.
So
No.
what this show is, it is going to be different than FinTech Friday. FinTech Friday was kind of the working name when we realized having just one ticker in the name. Some companies take issues with that, and it kind of puts us in a corner where if there's no news, and we have it in the name, what do we do to rehash the same thing? So, of course, Tanner loves FinTech. I love FinTech. Steve doesn't really care about FinTech, and Tevis, like I mentioned in the last show, can only hear about PayPal so many times before his hair starts all turning gray and falling out. So we don't want to do that to Tevis or to Steve. This is going to be more of a broad show. A lot of tech names and a lot of tech focuses that we're going to be talking about as well. So we got two things on the agenda for sure tonight, but I'm sure that there will be a lot of topics too. Last night we talked about Steve talking about TSMC and their earnings that they had, and AI sector ramifications, and also Clarity Act and what's happening in crypto. Where do you want to start, Steve?
We can start with either or. You pick, and let's just get into it.
All right, let's do maybe TSMC then. Did you guys both see what they dropped as far as earnings?
Yeah,
No.
it was a smash.
Yeah. What really I think got a lot of attention too was not just the beats. Like people were kind of expecting that. Maybe that was priced in. It was what they said around CapEx and specifically what they're doing next year. And so this year they did a little bit over $40 billion in terms of CapEx expenditure. And let me pull up, make sure I'm quoting them right. It's the third one. It's the last one. Okay. Yeah, they're looking at, well, I'll share my screen. Sorry, guys. I just realized I'm not sharing.
You have the budget up?
Well, I have the earnings call itself because they said two things that I thought were really interesting. A higher level of capital expenditure is always correlated to higher growth opportunities. And you can see down here, they went from 40.9 is what it is to between 52 and 56. So they say, with our strong technology leadership differentiation, we're well positioned to capture. So in essence, this is what they're seeing. Now, they got asked by an analyst about AI bubble. And it's always fun when CEOs get asked that. So he said, this is their CEO, he said, you essentially try to ask whether AI demand is real or not. I'm also very nervous about it, you bet, because we have to invest about 52 to 56 billion in CapEx, right? If we didn't do it carefully, that would be a big disaster for TSMC for sure. So of course, I spent a lot of time in the last 3 or 4 months talking to my customers, then their customers. I want to make sure that my customers' demand are real. I talked to those cloud service providers that might interest you, Tevis, with Nebius, and their answer is, I'm quite satisfied with their answer. Actually, they show me evidence that the AI really helps their business. So they grow their business successfully, and he or she in their financial return. So I'll double check their financial status. They're very rich. So what were your initial thoughts with the earnings from TSMC? And I guess first, are any of you guys in that name?
No, but I'm going to be.
I mean, yeah. I've thought about it a number of times, and I've just never pulled the trigger. But instead, I just prefer more NVIDIA. But yeah, I mean, like, it makes sense. Great company. They're positioned well, unless you think Taiwan's being invaded or AI is fake. But I don't think they spend $52 to $56 billion flippantly. This is not that type of company. This is not that type of CEO. And that caught a lot of eyebrows. So, okay, second order effects. What were your first thoughts as far as like the AI trade, AI sector, and names that you guys are in as it relates to that CapEx spend and what they're seeing?
Yeah, so this is the most significant news we've had in weeks, if not in months. And that includes NVIDIA's earnings. Here's why. TSM has the clearest vision into this trade because they're the ones that are producing the majority of these chips. For them to increase their CapEx from 40.9 to a range of 52 to 56 billion, you're increasing your CapEx spend next year by 30% minimum. You don't do that if orders are slowing down. When you combine that with the RPO that we got from Microsoft, Oracle, Amazon, and Alphabet, the four of them have between 1.1 trillion to 1.2 trillion in RPO for cloud services. Now, we know NVIDIA chips sold out across the board. We know that TSM is not expanding their production facilities if NVIDIA, Broadcom, and AMD are not increasing the volume that they need to produce on the chips. This is super bullish for the AI trade. Anybody who thinks that AI is a bubble or the AI trade is stopping next year, they're wrong. I'll bet a lot of money on it. They're wrong. The reality of the situation is TSM is not going to make this type of capital investment for a one-year thesis because it's going to cost them a ton of money to maintain this going forward. This is something that's going to continue to expand. Q4 earnings are upon us. I'm willing to speculate that we're going to get big CapEx expansion from Microsoft, Amazon, Alphabet, Meta. I don't care about Oracle because the balance sheet is the balance sheet, even though it's significant. But on a second order effect, this is super bullish for the neo clouds because this is showing everybody if TSM has to expand, the demand is so far above what everybody thought. And these are the greatest CEOs ever in the history of the human race. Period, full stop. And for all of them to be aligned on this and go full gangbusters on AI, there is no way that AI is fake because this is embedded in all of their products. And I would rather listen to all of the top CEOs from Nadella to Jassy to Zuckerberg to freaking Sundar to Elon to Jensen to Lisa Su. I would rather listen to all of them than somebody on the sidelines that thinks that this is a bubble so they can try to correlate this to the dot-com bubble. It's not true. And this is just going to keep going.
Tevis, what do you think?
Yeah, I mean, earlier tonight, Roy and I were fielding questions around the AI trade and whether tech can keep running. And I think it's further validation from a demand perspective, at least, that they can for the remainder of 2026 at the very, very least. But again, we talked about Meta spending or expanding their CapEx spend. And the thing that I drew a parallel to was, look, man, this is not Meta spending superfluously on AI or on metaverse that they're just like throwing away money. This actually has real world use cases and it has a high likelihood of materializing in the actual income statement, of compounding them even further from a returns perspective. So really strong validation. I think I'm actually curious to hear from you guys. Like, do you think that the earnings season that we have coming up in the next couple of weeks are going to validate that even further? We're going to hear from NVIDIA, obviously, but all of these other names as well. And not only increasing CapEx, but they're going to talk about the demand that they're seeing. I'm really interested actually to hear Nebius earnings because I mean, the demand has been the driving force of that company so far, and as with many of the data center neocloud plays. But yeah, it's going to be interesting because we get a refresh of what the demand is looking like when these companies report earnings.
Yeah, like all earnings season, I've said NVIDIA goes like last out of the Max 7, but all earnings season is NVIDIA's earnings season just because you're going to hear, and you know, also you could say TSMC, although it's in the front end, about the CapEx expenditure and what's happening, the ROI as well in the space from the hyperscalers. They have a really good read at what's happening in their segment. But yeah, the TSMC like comments from the CEO, like already knew that they were more conservative when it comes to like just ramping revenue. They don't do that for the sake of revenue. Very different mentality than the United States, oftentimes. But yeah, they're talking about their customers. So a lot of them are the big hyperscalers, but also their customers, and they have the best read, like you said, Steve, on the planet. So as far as like the rest of the earnings season, you might say and argue, well, TSMC, they kind of have a vested interest to make it look like it's not a bubble. But the CEO, when he was addressing, when he's like, hey, I'm also afraid that it's a bubble, but here's what I'm seeing. That's not a guy that just like, oh, you're ridiculous, you're stupid, whatever. The other thing is a lot of these companies like Meta, case in point, you mentioned this, Tevis, they actually have a vested interest to not say how much they're spending on CapEx or to minimize that because shareholders are not happy about that right now. But they're doing the opposite. Why? Because they see the ramifications of not being in this race are a lot more so than spending a lot of money and maybe it just not working out. But it's worse to just be on the sidelines like Apple from the assessment of Zuckerberg and actually, frankly, anybody else that's in the space. So yeah, I think all earnings season, we're going to hear more and more about this. And it's not just on the hyperscaler side. We're going to see this on the software side as well. There's a lot of startups that are starting to come. Palantir, of course, is going to have earnings in early February. Their earnings, like there was, I don't know if you caught this, Steve, but there was an analyst last week, Tyler Radke, I believe. I can't remember what organization he's with right off the moment. But he was previously quite bearish on Palantir. And then they did what several other companies did with Palantir, where they're like, okay, let me not just look at the numbers. Let me instead talk to Palantir's customers and talk to those that are in the space. And doing that, it doesn't take very long to be ridiculously bullish on Palantir and know that, yeah, it's really expensive. I'm not buying it hand over fist at all. The world's slowest DCA is what I'm doing. But like, so anyway, he came out and he said that there's a solid chance that Palantir puts up 70 to 80% revenue growth this year, not this quarter, but this year, off of a significantly higher base. That's well ahead of analyst expectations. Now, you might say that's still priced in. It's so expensive. And I'm not going to argue hard, but what I'm saying is demand is real and companies are thirsting for ROI. Some of them didn't have that with their first projects or their pilot projects. But if I can throw this up real quick, Steve, this was an interesting little from a survey on Payments Magazine, and they're focused more on agentic adoption and AI commerce. But we've seen an interesting pivot with a lot of these CPOs that they involved with. Back in June, 90% were like, hey, we got no plans to adopt AI, and 10% were like, yeah, maybe. Within 6 months, actually, well, less than 6 months, this is from November, we can see how much and how significantly that changed. And part of that, what's happening here, you can look at the different adoption levels that some are just using pilots, some still have no plans to adopt. You can see the different segments that they're in. But yeah, at this point, I think companies in this space, if they had questions on AI and ROI, they've seen enough in their space, in their sector, and even perhaps from competitors or internally to know AI is real and they want a piece of that. And all of this type of stuff drives Nebius, drives CoreWeave, drives NVIDIA, drives TSMC, drives Air Test Systems, drives Palantir, drives AVGo, drives so many other companies, lots of winners in the space. It's not a bubble.
Steve, I want to show you something that I just saw on my X feed. It's going to change the topic a little bit, but I'm curious to get your thoughts on it. Do you have anything more to add on the AI piece before I change it?
Yeah, all I would say is regarding Palantir that it's one of the greatest companies I've ever seen. Their Q3 earnings was one of the greatest sets of earnings I think the market's ever seen from a business aspect. 134% net dollar retention is amazing. I think people are overlooking the fact that the net dollar retention does not include any deals in the past year. And they have so many large scale deals that while 70% revenue growth this year may seem ridiculous to many, I wouldn't be surprised if they do. I wouldn't be surprised if they don't. I do think they're going to get 40% plus this year on revenue growth. And it's an amazing company. I think it's grossly overvalued from a valuation standpoint, but it's a company you can't bet against because in 10 years from now, it's probably going to be significantly bigger than it is today. The question is, does it need to go down? And I don't know that it does. I think that it's something that can follow the Tesla playbook at this point. So
Before we fully pivot away, Nihar, thank you for the $2 donation. End of an era. Yeah, we learn more probably than anybody in the audience just from each other interacting, and that's a great thing. But I want to throw this chart up too, if you can, Steve, before we fully pivot away here from the AI thing. This was really fascinating for me, is the global AI computing capacity. Steve, can you throw that up? I think you're in the driver's seat. All right, thank you. It's doubling every 7 months. And you can see it's estimated for the H100s, but you can see, of course, NVIDIA. It's ridiculous. But there are others as well. The TPUs for Google, they are increasing massively. Amazon as well, the Trainium chips. And we've seen a lot of demand and some interesting contracts from that side. AMD as well, Huawei. There's others here too, but this is not just simply because of speculation. The demand is absolutely real.
Thank you, Mike, for the 10 gifted subs. Let me throw this up. I'm so curious to get your guys' thoughts on this. Steve, did you see this? So the head of product at X just posted saying we're giving $1 million to the top article posted on X in the next 2 weeks' time.
Yep.
Winner takes all.
I saw it.
Are you going to be writing on X? All of a sudden, Seeking Alpha has got to be punching air right now.
What do you mean?
Well, I mean, over the past couple of weeks, X said they want to increase creator payouts. They want to increase content creators on the platform to use it as their predominant platform. And now they're giving away $1 million for the top article. You know how many people are going to start writing articles on X? And they might not be exclusive articles on X, but
is it a post or an article? Because there's two different things.
An article.
So where do you go for that on X?
I believe it's its own thing. It's like a. It's somewhere. It's like a long post that can be turned into an article.
So you basically go to premium, you go to articles, and then you go to write.
Yeah, exactly.
Okay.
And
who can see articles? Does it come in as a regular post?
I think it comes in as a regular post, but you can put like a little image and whatnot, and people can share it out. Like I've seen articles in my feed before, and you can just open and expand them and just do like a full reader mode. But the interesting thing is like, you know, obviously X payments is an interesting backdrop to all of this, but they're becoming more and more serious about getting creators. And I think they just hit a record number of usage on X as well. So kind of interesting. I mean, obviously not related to anything that we were talking about, but I just saw it on my feed. And yeah, they're serious about increasing payouts, man. They're going to be sort of being the black hole at the center of all of these content creators from YouTube and from Seeking Alpha and from Substack.
So let me ask you this. Have either of you ever gotten paid from X?
Yeah.
Yes.
I get paid every 2 weeks.
Yep.
And you legitimately get paid every 2 weeks?
Yeah.
Yeah.
Not much, but yeah.
Put in the private chat what it is.
Well, I'll just share. I've shared it before.
I'm not asking you to share.
I can
I
just show
just
it.
want to know.
Yeah. It's $50 to $100 for me.
Yeah. I think overall on X, here, do you want me to just share my screen?
Not unless you want to.
It's okay. You can throw it up. So this is I had one thing that went viral and that made me $200 for that week, but generally it's about 30 to $50 every 2 weeks or
I
so.
feel like they're going to have to increase pay
So-
so much to be.
Well, yeah, we'll see what it does, right? Because I mean, the impressions over these 2 weeks were fairly similar, but this was after Elon was like, "Oh, we're going to increase payouts." Now, I don't post any videos on X, nor do I post any of my real content. It's just like
Sorry, Roy.
No worries.
it's tweets, it's stuff that I retweet, it's just posts. Once they start actually paying for videos, because they changed a little bit around how they're giving out revenue, it's based on impressions and activity from verified premium members. Once they start actually focusing on video and expanding out that creator studio dashboard, bro, I think that's where you can actually get a really competitive pricing strategy relative to YouTube. So it's not the exclusive place you post stuff. And that could be interesting because then you can have like a stream completely on X and we can test some stuff out. But I mean, look, man, I was going to tweet anyways. The fact that you're getting even $30 or $50 every 2 weeks is all the better.
Oh, I'm not disagreeing. I'm just saying I think they're going to have to increase significantly to pull from other places, such as Substack, Beehive, no matter what it is. I mean, we'll see what happens.
Well, think about this, right? Like, okay, let's say you are one of the top creators on Seeking Alpha, and you want to now attract a lot of traffic because you want to actually give a shot for that $1 million prize, right?
Mhm.
And you say, hey, look, this is my next article and special one time only. I'm going to have this only for X subscribers or X people. I'm not going to be having it on Seeking Alpha. All of a sudden, just that contest, that $1 million, they're going to get such a high ROI from that because you bring advertising to X for all of your Seeking Alpha, people, and some of them might not be on X or might not use it as frequently. And just as you are going to do that, everybody who's writing articles is going to do that. If they do another thing with $1 million, I'll make videos on X. I know I'm not going to win the $1 million, obviously, but I'll still do it, right? Because there's no downside for you. So I think it's really interesting because they're getting a lot more members. Thank you, Express Investing, for the 20 New Zealand dollars. Really appreciate that. I think it's going to be a good thing, man, because more competition is good for creators, right? It allows you an alternative for your content.
Speaking of X, we're not FinTech Friday and SoFi Weekly anymore. What did you guys think of Noto's post with on the 10% and how SoFi is positioned? I can bring that up, I guess, just so it's fresh in our minds. And let me grab.
I think it was positive. I mean, he did a good job of explaining how it would be beneficial for them for personal loans, and that was one of the biggest outstanding questions or critiques around ambiguity of how SoFi might be hurt or might benefit from this. And of course, we want Anthony Noto to be writing, that sort of long form answer explaining stuff more in depth. So I thought it was just the right amount of detail. He said, I highly doubt this is going to pass, but I kind of hope it passes because that's going to help us quite a bit.
Well, so not just about the Clarity Act specifically, but
No, the 10% cap.
Oh yeah, you're right. He did. Okay. I was thinking about two different things. So he is kind of hoping it. I actually think he's wrong. He's smarter than I am. He knows the space. He knows the company, and he's right that if one credit box closes, that others will try to open and fill in the void, and they do benefit some from buy now pay later and personal loans. But the problem is, about half of the personal loans are fueled by credit card demand, and also if this bill's probably not going to pass anyway, or it's not even a bill. Well, it is a bill, the Hawley and Sanders bill from last year, but it's likely not going to happen. It's not really worth worrying about, and it's certainly not going to happen before midterms. But if it actually hit, it's either going to be so porous, like many of the state usury laws, that it's just not going to matter, or that they will also try to tighten other credit boxes like buy now, pay later, maybe even like personal loans. If so, we're looking at like a great recession, just because 70% of spend by consumers in America is driven by debt. So I think that he's right that SoFi is better positioned than a lot of peers by a large margin. But I also think that he's wrong that it's going to impact everybody that's in the space negatively, just some more so than others.
Can you throw up Mr. PFLAS's comment? He says, did you guys see the news today on the 10%? They said it's 10% only on a small cap card, only for low credit score people. It is not across the board.
I didn't see that. Oh, go ahead.
If that's in fact the case, then that's even dumber, because you're just completely pricing out the low FICO score people because they have low credit scores. Like, that's where all the profit comes in for these credit card companies. I understand the thought process of saying like, oh, well, these are the people who get abused the most, but it's also like the reason they get abused the most is because they're not the ones that are paying their credit card balance on time.
Yeah, I mean, like that's the reality is if a bill like that is actually going to pass, it's going to be very much like the state usury laws that are so porous or so very specific that it just doesn't really matter. So I didn't see that, double check to make sure that it's legitimate, but it doesn't surprise me.
Steve?
I'm not surprised that this is changing, and we'll see what happens. I mean, look, either way, I think SoFi is going to be fine. I think that they will be able to pivot quicker than other companies. And I actually said the other day, and I stand by it, that in that type of scenario, they can tie a personal loan to a card and have it act as a credit card with the same margin that they're currently getting on personal loans. So I think it's a nothing burger for SoFi, but it was something very serious for the industry that they could get caught up in. Am I bringing this up, Roy?
Well, yeah. If I talk just a little bit more SoFi, did you guys see that Basint actually replied, quote tweeted Anthony Noto? So,
Yes.
Okay, yeah. They're matching for employees. When I retweeted that, people are like, "You didn't say employees. You implied it." I was like, "Dude, it's the first line. I don't have." But whatever. Really cool for SoFi. A little bit sad for data-driven investing because but I guess he and his wife, go have more kids, guys.
Yeah,
but Anthony Noto was one of those that was early in helping and, of course, stumping for this. There was a lot of others too, including Vlad Tenev. But it's just really cool that the Secretary of the United States, recognized Noto's work in the area. It's interesting. Like, this is a very different Noto, and I like seeing him a lot more engaged and active on X. I wouldn't want to see him like posting like Elon Musk. I'd be like, okay, great, Noto, get back to work, please. But when, at least what I've seen Noto doing this sort of thing and tweeting regularly and responding and replying, nothing is guaranteed, but I think it's usually indicating that his mood is very high and elevated, that they're absolutely killing it in the space, or that he's very excited about something that they're launching. So I think quarter 4 is going to be amazing.
I mean, they've never missed a quarter, so it's not as clear cut and dry.
Yeah. Well, they're not going to miss, but I think it's going to be pretty phenomenal beat. So, like, with that capital raise and everything, like, they can just the cool thing is, like, they can be so flexible. They talked about optionality, that no matter what the market throws at them, some segment of theirs is going to be primed for growth. 10% cap or not, it being a niche or not, rates lowered or not, housing market, student loans, crypto as well. I like it, man.
What matters is not necessarily so much that they're going to, I do think they're going to beat. I don't know to what degree they're going to beat. We'll see. I still have to do my predictions, maybe this week, and I'll work on that. But what matters more, I think, is going to be the guidance that they give, because it's going to be full year guidance first and foremost for 2027. And they're also hopefully going to be providing 2028 Sorry, my Alexa's just going off because it's like, hey, you have the FinTech Friday starting in 30 minutes. Rip. I think the guidance for the multi-year basis is also going to be important, right? In 24, they talked about guidance for 26, I believe. And now we're in 26, so I hope they provide guidance for 28. That could be cool because you could see 28 what their EPS range would be and what their commentary would be around that. TBD.
Yeah. All right. Do we want to discuss Clarity Act or crypto at all? Or what were you wanting to discuss, Steve?
Yeah, we can do Clarity Act and we can do cryptos. I mean, I'm pretty sure you guys already talked about BMNR, correct?
Steve, did you get all your energy out with Matt? You got to save some for us, man.
I'm letting you guys go. I gave a big synopsis on AI. When you guys talk about Nodo, what do you want to talk about?
We could talk a little bit Clarity Act, sure.
Okay.
Do we want to get Roy? Do we want to get Steve's thoughts on BMNR first, since we covered it on our show?
I don't know if you want my thoughts on BMNR.
Yeah, let's do that. We have to, and then let's talk Clarity Act, Coinbase, Brian Armstrong.
Nice.
It's going to be a 2-minute rant.
Rant away.
You don't care if I get hot on this?
I'm here for it, buddy.
This is Unfiltered.
All right. This is Unfiltered, so we're about to get fucking unfiltered, and this is a show where I can fucking curse.
By monetization, but that's okay.
No, that's
not a family-friendly show.
Listen, we marked this is not made for kids. Cursing does not hurt monetization. Am I correct on that?
It doesn't matter either way. Go.
Anyway, this is not a knock on Tom Lee's career. Tom Lee is a person, but he is not the right person to be the CEO of BMNR. He should be either the chairman of the board or the president of the company. They need somebody as the CEO that has the energy, that has...
He's not the CEO, bro.
What?
He's not the CEO. He's the chairman.
He's a chairman?
Yeah.
Okay, well, they need a CEO that can deliver the message, because when you're giving that type of meeting and you're giving those types of talks, you need to be able to deliver the vision. You need to deliver a clear message of why investing in BMNR is better than investing in Ethereum. He had 2 jobs. Show us why Ethereum wins in the future of finance, which he did not do, and what the value proposition of investing in BMNR is over Ethereum, which he did not do. What I would have rather heard from him is, listen, you're going to get a great value by allocating capital to BMNR instead of Ethereum, because we are the #1 proxy of Ethereum. We hold X amount, you get an MNAV of this. We're constantly buying, we're staking, we're becoming a holding company. The staking is going to generate 350 million or whatever it is. Our first big buy is a pipe investment into the Beast company. And this is why that's important. And not just link Mr. B stuff, actually talk about what the company is going to do and why this is going to be accredited for shareholders and in shareholders' best interest. And then say, these investments are investments that don't cost the shareholders anything, because it is all from the income that we generate from staking. And then go into why staking, trusting BMR to stake over buying Ethereum, staking yourself, you get better value out of. They originally said they were going to stake through DeFi and restake. I haven't heard anything about that so far. They should have been discussing that. He sounded like he drank 2 bottles of Robitussin. He had no energy. He couldn't work the crowd, and he wasn't coherent with some of his things. Anybody who's been to any type of presentation, or anybody that's led a presentation or given a talk or anything, knows that you cannot do what he did. And it was a bad look. Now, ultimately, this is a play on Ethereum, so it doesn't necessarily matter what he does at this to some degree because this company is going to live and die on the price of Ethereum. But I don't think he did what he needed to do for the shareholder base to show what the value proposition is and actually explain everything going into it. And as a shareholder, I'm a little annoyed. I'm annoyed that nobody read the speech. And if he winged it, he did a really bad job of winging it. And as the person there, you're the networker, you're the communicator, you're the one delivering the strategic vision. He didn't do any of it. And it's a missed opportunity. And if he's not the person to do it, that's fine. But hire somebody to do that. Hire somebody to deliver the message clear and concisely and show us why our capital is not being wasted and why we get better value out of BMNR. And give us a roadmap of different investments that you are thinking about doing. Show us where our capital is going. Make everybody feel the vision. Make everybody feel that this is the investment to make. I just don't think he did it. And it was annoying.
Bro, he showed the chocolates at the end. It was like an episode of The Office. It was wild.
Yeah. It's it's similar. I don't hate the Mr. Beast and Beast Industries saying. I think Tevis and I are on board that they'll probably make money off of it, distribution, marketing, all that sort of thing. The timing is terrible. The only other piece I'd add, Steve, is like you literally announced this right after you've been begging shareholders to vote yes for the 50 billion authorization for share count. And the first thing you do is not buy more Ethereum, but put 200 million in a moonshot for Beast Industries. Terrible timing. Terrible. So
yeah, I don't like the timing. I don't hate the investment, but what I would have liked to know about the investment, tell us the metrics. Don't just say he's the most influential. Don't just say he gets the most views. Give us the metrics. How many views does he get? How much watch time is spent?
No. He did get that. He said 254 million views per month, which is double.
I didn't hear that, so I will stand corrected on that.
Look, guys, we're shitting on the Mr. Beast deal because that's the only thing we can pick at, and it's the one deal in an event that we thought was going to have many more deals. In isolation, the deal itself is not a bad deal. I'm very bullish on the deal. Here, let me throw up my screen for a second, Steve. Look at this guy's subscriber count compounding over time, and then try to extrapolate out in your mind what that looks like in 5 years from now. This guy
and also
is
talk about. Look,
go ahead.
Warner Brothers Discovery is going for a tremendous amount of money right now, and it is shot up from 7 a share, and it's going to get bought out for around 30 to 32 most likely. Talk about how Mr. Beast Entertainment is scaling into one of the largest entertainment companies, and we now have a slice of it. And in a world where content is king, this will end up being a great investment. Incite the last 3 companies that got acquired. MGM got acquired by Amazon. Warner Brothers has a bidding war between Paramount and Netflix going on. Explain why to the shareholders that this is going to be accretive. Don't just say, we think we're going to get a 10x.
Yeah, I mean,
No
this
metrics.
is the number one trending show right now in the U.S. on Amazon Prime. And again, this guy has a distribution channel like no other. And I think $200 million is a pretty small amount in the grand scheme of things for a $15 billion company like BMNR to be investing in. I think everything else about that investor day was what I have an issue with. But the Mr. Beast thing in isolation, I think, is going to give them a lot of optionality for distribution in the future.
So my other thing that's in the back of my mind is like we don't know what this financial product is going to look like. They've mentioned DeFi, they've mentioned crypto tokenization. They're going to launch something, and they'll probably be very successful given where that audience is. People have the perception that the audience is all 13-year-old people. A lot of those 13-year-olds have grown up, over those many years that Mr. Beast has been doing content. And I mean, we've seen what they did with Feastables and other things too. But if, for instance, SOFI announced $200 million, Mr. Beast, that's amazing. Just because, I mean, you can see the way they mention Feastables and in different content, that they mentioned Shopify, who's a sponsor, and all these different things. That's very accretive. Or if PayPal did that, awesome, that's amazing. Or Venmo, with part of PayPal, or like name any other financial product. The problem is BMNR does not currently, now we'll see what spinoffs they look like, but they don't need marketing. They don't benefit from name recognition or anything like that. Ethereum does not need marketing. That's the beauty of the Ethereum and the thesis there. It does not need name recognition. So that piece of it, like, I still think it's accretive, depending on what that product looks like. But there's a lot of question marks. So really, it comes down to me whether or not I trust management and leadership, and I do. But this could have been done better, and it could have been done with more clarity. So, yeah.
So just a couple of other stats for you guys, since you didn't get them at the investor day. So I don't know if you know this, Steve, but Beast Industries is apparently $5 billion, and Mr. Beast owns more than half of the company. So he is a billionaire. He's 27 years old, by the way.
Yep.
Now, the other reason why I like this is not necessarily what BMNR can leverage this for over the next decade. I also liked it for this, let's say, complementary secondary reason, which is that it is the only way that a retail shareholder can get exposure on investing in the trajectory of Mr. Beast in public markets. There is no other mechanism to do so. It's a private company. And so if I want to buy a call option on this guy's career, right now, the only way I can do that is through BMNR.
Yeah, I get it. And I don't hate that. And if they're going to become a holding company of moonshots in addition to the ETH, I don't have a problem with that. I would just like a more clear vision. That's all.
Yes.
I don't hate it. I mean, some would say that he's going to try to build a Berkshire Hathaway of crypto and moonshots. Who knows?
Did you guys like it better than Orbs? Because I for sure did.
Well, let me ask you guys this. He said 5,000 a share. Oh, is he reverse splitting, or does he legitimately think this is going to 5,000?
I mean, I think he believes in his Ethereum price targets just the same as he did with Bitcoin when he was talking about it in 2019, and it's gone past that. I think they're a little aggressive, but if Ethereum goes the way he's expecting, it's not ridiculous. It just that's a big if. It's a very big if.
I think it's like very far into the future, Steve. Like you notice that there's no time on that 5,000 a share.
Correct.
It's like, if you hold for 20 years, I'm sure it will go there.
Okay.
All right. You want to do Clarity Act?
Take it away, Roy.
All right, let me throw up, because I thought there was a lot of, including Anthony Noto and Vlad Tenev, said a few comments around it. Brian Armstrong, I think, gave kind of the most scathing review, and there's been a lot of pushback as well. So he says, after reviewing this, if you guys are not familiar, he's the CEO of Coinbase. After reviewing I know you guys, but the audience, just in case. After reviewing the Senate banking draft text over the last 48 hours, Coinbase unfortunately can't support the bill as written. There are too many issues, including a de facto ban on tokenized equities, DeFi prohibitions, giving the government unlimited access to financial record and removing your right to privacy, erosion of the CFTC's authority, stifling innovation and making it subservient to the SEC, draft amendments that would kill rewards on stablecoins, allowing banks to ban their competition. We appreciate all the hard work by the members of the Senate to reach a bipartisan outcome, but this version would be materially worse than the current status quo. We'd rather have no bill than a bad bill. Hopefully we can all get a better draft. We'll all keep fighting for Americans and economic freedom. Crypto needs to be treated on a level playing field with the rest of the financial services so that we can build this industry in a safe and trusted way in America. And we can see, there's a lot of pushback on Brian Armstrong's comments that I don't think I'll necessarily pull up here, but most other CEOs that I've seen they didn't reveal quite that much where they're like, hey, it's a step in the right direction, or we're excited to see what the future outcome will be. They came out just flat out against it. I guess first question, do you think that the Clarity Act and its passage is what crypto is kind of waiting on in order to make it move higher?
I mean, maybe it might be worth calling out, what is the Clarity Act in its current form, and why don't these CEOs like Brian Armstrong want it to pass in its current form? Brian Armstrong has been one of the largest proponents of the Clarity Act, by the way. He's been hand in hand with the government officials, Congress people, to push this particular bill forward. And so it's very surprising that he came out now against this, saying that it shouldn't pass. So what changed and what's different about this?
I mean, I have not been following the act incredibly clearly or in great detail. I've mostly been looking and focused on how it impacts Ethereum and how it impacts BMNR. Those things seem like that they have not been changed, but from what Brian Armstrong said, it's bringing back more stifling regulation that was more typical of the Biden administration, and so Brian Armstrong is not happy with that. Plus the anti-privacy stuff, basically the disclosure stuff that has to happen. The blockchain is already public, but they're asking for more open disclosures as well, which isn't necessarily the healthiest thing. You don't want it to be a black box, but you can see the blockchain right there. I think it's fine. Steve, do you have any thoughts? And then I want to throw up this, which somebody referenced. I can't remember who.
Let me just jump in right before Steve to highlight what changed. And then Steve, I'd love to hear your thoughts. So Brian Armstrong famously tweeted that he would rather have no bill than a bad bill, arguing that the Senate rewrites had turned legislation into something materially worse than status quo. There's 4 things that were deal breakers that were added into the bill that made Brian Armstrong turn on it. Number 1 is the ban on stablecoin rewards, basically prohibiting the exchanges from paying interest or rewards to users holding stablecoins like USDC. And Brian Armstrong argued that this was a handout to traditional banks intended to stop them from losing deposits to crypto platforms. Number 2, the de facto ban on tokenized equities. So basically having new provisions in the bill to block the trading of tokenized stocks. Number 3, DeFi surveillance and privacy. The Senate version included strict prohibitions and reporting requirements for DeFi. And Brian Armstrong called these unlimited access to your financial records, effectively killing DeFi in the US. And number 4, it empowered the SEC over the CFTC. The original bill favored the CFTC, and they're a more crypto-friendly organization. The rewrite gave the SEC significantly more authority to determine whether a token is a security, which Brian Armstrong called an erosion in the CFTC's role. So those are the 4 main changes.
Yeah,
So
it's hard to know really what's the right way to go on this, because whatever is passed now, we don't know where politicians are going to be in 3 years from now if we get a dramatic switch. And it's very important that what gets passed right now is as beneficial as possible, because it'll just prolong any reversing of it. And I understand why he says he'd rather have no bill than a bad bill, because they had to deal with so much from the SEC under Gensler that was really detrimental to where the climate is right now. It's night and day. And I don't know enough about it to give any high-level intelligent remarks on it, except I have to trust that Brian Armstrong knows what he's doing. And the fact that you don't have any real high-profile people coming out and saying that he's incorrect or making a case to try to change his mind or gain traction to try to get the bill in its current form passed, to me says that they're trying to figure ways out to change some things. So I think we need to see what gets written in the next version of it, because obviously he's on to something, or it would have been a coordinated attack. Maybe attack's not the right word, but a coordinated effort to defend it. And we didn't see that.
And I think the most contentious piece is that yield for sure. Some have seen it as handout for the banks, and the other side is like, well, if you do this, you lose a lot of money in terms of deposits. I actually think that that's a spurious argument, and the reason is there are stable coins that are able to give yield right now, and you're not seeing deposit erosion. Like even with PayPal's PayUSD, just because it's issued through Paxos, they're able to give that yield, which is higher than what you get basically at any major bank. But you're not saying people like saying, hey, I want to buy and hold this stable coin, even though it is prudential regulation. And like it's a very safe, well-regulated, well-tested to stable coin. So I think it's a dumb argument. I think that this really is banks and banks lobbying and saying, hey, let's throw our muscle to try to get this stopped so that we have a niche and an advantage that others can't make inroads in. And then this came out actually just not even an hour ago from a reporter. If you can throw this up, Steve. Used to be with Fox Business, now with Crypto America, Eleanor Terrett. And so she said the White House is currently polling its support for the crypto market structure bill entirely if Coinbase does not come back to the table with a yield agreement that satisfies the banks, which is, I mean, like, that's tough, and gets everyone to a deal, a source close to the Trump administration tells me. The White House is said to be furious with Coinbase's unilateral action on Wednesday, which is apparently was not notified of in advance, calling it a rug pull against the White House and the rest of the industry. The White House does not believe that one company speaks for the entire industry. The source continued, this is President Trump's bill at the end of the day, not Brian Armstrong's, the source said. Case in point, like Vlad, Noto, I know it's a bank, and others were more measured with their reply instead of outspoken hostility towards it. So what are your thoughts, I guess, on the credibility of this first and then implications?
That really does feel like a rug pull because we were led to believe, or collectively, that this was in its final innings, and now it seems as though it's completely gone back to the drawing board to be rewritten and opened for debate once more in what form it's going to pass. Like, we had something that was good to go from politicians as well as from the crypto community. Everybody was really excited about it. And now all of a sudden we're back to square one. And that, I think, is going to not bode well for the green shoots that we're looking for in the crypto industry and Bitcoin rising and Ethereum rising. And I think we can get stuck in this gridlock for quite a while. I mean, Trump moved pretty quickly on crypto as soon as he started his term, but it's all been leading up to this, and it culminated in last week, and it can take another year. I wouldn't be surprised.
I hope not.
I hope not either, but like at this rate,
Brian Armstrong is right though that no bill is better than a bad bill. And honestly, well, I guess before, I'll just say real quick, expecting Coinbase to go to the banks and figure it out, like basically between them, an agreement. Banks do not want Coinbase to be able to offer yield at all. So like, what's the middle ground there? I don't think there is one. So what are your thoughts, Steve?
There is no middle ground. I mean, if these projects, for lack of a better word, are set up to be able to provide rewards through staking, then kind of defeats the purpose of some of these projects and a clear investment point for the investment community. So we'll see. I don't know. I am more concerned about the stablecoin aspect of it. So we'll see if anything changes with that.
In what sense, Steve?
In the sense that stablecoins become the settlement layer between cross-border payments is really where I'm going with this, because the SWIFT banking network is so archaic that I think that is a fundamental reason for crypto. And if they screw with this, this could be dramatically bad for the entire crypto industry. If something happens with stablecoins where it no longer really has a use case for that, I mean, we saw how much excitement happened after the Genius Act was announced because it gave clear guidelines for stablecoins. I would hope that the Clarity Act in its final version does not take away from that, because that is a very large investment thesis for crypto.
That's a good point. Do you think it would go that far?
I don't know. We got to see what happens in the next couple of weeks.
I think I don't know, man. I understand the lobbying from TradFi and all of the, these embedded traditional financial institutions. I do think that there is enough bipartisan support for the advancement of crypto, though, to at least move something forward. Maybe not in the form that it was in December, but I don't necessarily think it's going to be as bad as you fear it might be for stablecoins. That's the hope, at least.
Yeah, it's too early to say, but it's not really a comfortable thing where we thought we'd have, pretty clear regulation. And then for a little while, it looked like that we wouldn't have bipartisan support, that it'd be pushed back further. We got that, but, I actually agree with Brian Armstrong. I don't think that there's any reason why other companies shouldn't be able to offer yield directly on stablecoin. I think it's good for consumers. It gives another opportunity. I don't think it's going to kill the banks.
Can you throw up Cheryl's comment? Rewards on stablecoins are safer than bank interest, which is near 0%, at least for traditional, banks. Since stablecoins are backed by treasuries, bank deposits are not. I deal with banking system for wires all the time. It's a nightmare for my business.
I mean, wires suck. And if you have to send money cross country, it's expensive because you have 2 or 3 intermediaries that clogs up the pipeline, increases the time, and increases fees.
So when's the next, milestone that we should be looking out for? Is there anything that's already set for us to get more news on this? Like, what's the next progression here?
I didn't see. Go ahead.
I just think they said they were going to come back in a couple of weeks with something.
As in a rewrite?
I have no idea.
I think that you'd want to have Coinbase in there. So whatever it looks like, whatever concessions there need to be made there. But yeah, it's not going to be Brian Armstrong going to banks and saying, please let us do yield. That's just, they're going to, of course, laugh him off the stage. And yeah.
Yeah, I agree with Jay Kim. A couple of months at the earliest. I don't think that this is going to be done in a couple of weeks. I think we might get maybe another sliver of information in a couple of weeks, but it's really killed my expectation of a big macro rally for crypto. I'm sure that there will be other catalysts for crypto to go up, but my confidence in this, passing in a timely manner is just, it's not the same.
So this right here was Vlad's comment. It wasn't scathing like Brian Armstrong's. Can you throw this up, Steve? Staking is one of the most requested features on Robinhood app, but it's still unavailable to customers in 4 U.S. states due to the current gridlock. Stock tokens in New York, you're affected by it, Steve. Stock tokens are available to our customers in the EU, but not in our home market. It's time for the U.S. to lead on crypto policy. Let's pass legislation that protects consumers and unlocks innovation for everyone. We support Congress's efforts to pass a market structure bill. There's still work to be done, but we see a path and are here to help get over the line. So this was the more typical response that I saw of people that are in this space. And there was a whole bunch, a lot of little guys too chiming in, but I think Vlad's voice is pretty important here too. It is actually just wild to me, given the state of most regulation in the EU versus the United States, that the regulation here still in the United States is less favorable towards crypto and tokenization than it is in the EU. That seems so backwards to me.
Yeah, the problem I have with this is from a fundamental standpoint of who the hell are these individual states to say that we cannot earn rewards on our crypto? Here's my biggest problem with this. They act as if they're trying to protect the consumer. How are you protecting us from not being allowed to stake rewards? It's crazy. And I had the same problem when New York State took XRP off of Coinbase and that whole thing with Ripple happened for 4 years. As an adult and as using money after I pay taxes on it, who the hell are you to tell me what I can invest in?
Bro,
Period.
I love that you're arguing morality with government and with banks. Like, I think you need to do a 6-month jail sentence in Canada and then try to argue. Like, you guys have it good down there in terms of having freedom of mobility around where you put your money, how you put your money, and so on and so
But
forth.
I'm just saying, if I want to go to the casino and empty out my bank account, nobody's going to stop me. If I want to empty out my bank account and buy lotto tickets to try to hit Powerball, nobody's going to stop me. But if I want to invest in the digital assets, somebody was going to stop me. I mean, it's kind of ridiculous.
Yeah, there's vested interest. You can see right through the incentives. All right, we're at the 1 hour mark. Roy, do we have any other topics, or shall we go into the after hours?
I think we can go into after hours, unless, well, depending on what we're talking about there. Like, did you guys see the Micron stuff and all the comments that are around there? So they broke ground on a $100 billion. Well, I guess, do we want to talk Micron in the after hours? Do we want to talk Micron right here just for a couple of minutes? It's another AI trade thing.
Well, we have to talk about something in the after hours.
Okay, let's do Micron then. It's like the comments. Evan did a great job of and shout out to him, Stock Market News on X, of collecting all these quotes from CEOs that are in the space. Micron's pretty interesting. It's one of those back in October that, because of Airtest Systems and the CEO kind of calling out what was happening in RAM early, and I wish I had listened more. It's pretty fascinating. Plus, what's happening here in the United States, it has ramifications for a lot of companies, including energy companies, which we haven't talked about yet. And I want to get your opinion on that. So let's say that for the after hours. So are we doing? We haven't discussed this yet. Are we doing the after hours live? I'm assuming.
Yeah.
Remember?
Yeah.
Okay.
Yeah.
All right.
Steve,
So the way
you
this works,
scheduled it
guys.
for what, 10:05?
I already
Yeah. When did you schedule it for? 10:05?
put the link in.
All right. Everybody, thank you so much for watching the first episode of Stock Market Leering podcast. And
The hell is we? No.
no. Hey, I said it. It's now set in stone. It's on the
No.
internet. Stock Market Leering podcast. Everybody, catch it here 9 p.m. Eastern every Friday. We'll see. See you in
And the
the
way the after hours works, you can be a member of any one of our channels, and you can watch it live, or you can watch it later as well. It will be live though here in a few minutes. Yeah, well, we're going to talk Micron. We're going to talk AI trade. I want to talk energy also with you guys.
Yeah, you do need a membership for after hours. Stock Market Leering channel. It's gonna stick. I'm telling you.
All right. Thank you, everybody, for joining. We really appreciate it. We will see you in the after hours.
Have a good weekend.